Archie, this is a really big day for Last Paycheck.
That's right, it sure is. Today, we are releasing our 100th episode. It's hard to believe that we have created 100 episodes of this podcast, and it's just, we've been doing it just a little over 2 years. And it's been an awesome journey, made possible by all of you, our viewers and subscribers. We've had the wonderful opportunity to meet a few of you, which is fun. We hope that we get to meet more of you, or at least interact in the comment section. So it's been so much fun, and we want to say thank you. We have some of our Last Paycheck mugs that we drink out of every episode. So we'd like to give those away to you all if you'd like one. So just leave us a comment and we'll reply. We can exchange information and we'll send you one free of charge for being a fan and a viewer. And anyway, yeah, we couldn't do this without you all. And we're very excited for our 100th episode and for 100 more. I'm Archie Hoxton.
And I'm Rob Hoxton.
And this is Last Paycheck, weekly wisdom to help you retire and stay that way. Welcome back to the Last Paycheck Podcast, brought to you by Hoxton Planning and Management. We're your hosts, CFP professionals Archie Hoxton and Rob Hoxton. And today, we're going to be talking about long-term care insurance. This is a question that we get a lot, and it's one of these things that it's a big decision. It's very expensive. It's a significant risk that's also very expensive. And so the question is, it often comes up, should I buy this insurance? Should I just kind of retain the risk? What should I do about it? So we're going to talk about that today and kind of go into some of the nitty gritty on, should you be buying long-term care insurance?
Yeah, and I think that probably we should start by just talking about what's the risk? I mean, there's been a ton of research, and it's interesting the way that men and women traditionally consider this risk. So, and I don't know exactly why. I mean, there may be some conclusions that can be drawn, but men typically don't think that they're ever going to need long-term care, much less long-term, and therefore no need for long-term care insurance. But, you know, it's just like the same research would suggest that men don't go to the doctors.
Yeah.
Right. And when they do, it's usually a stick out your tongue and say, type of an experience, and then you're off and on your way.
Yeah.
Right. But women tend to see this a little differently. I don't know if it's because oftentimes caregivers and families are often daughters when aging parents need attention, but maybe not full-time medical attention. So there's a different perception depending upon who you are. And it's pretty likely that we'll all need some degree of care as we age. And that tends to be defined by, a loss of activities of daily living.
Yeah, and the U.S. Department of Health and Human Services did some research and put out some pretty staggering numbers. What they found was that 70% of adults who reach the age of 65 will need some sort of long-term care or assistance in their life after 65. And 48% of adults who reach age 65 will actually have some sort of paid long-term care that they need. So not just, your daughter or son or whoever coming in and helping you through dailies of activity. Activities of daily living. Yeah, I'm getting all mixed up. So beyond just a family member helping, actually paying for professional help, 48%. So that's pretty amazing in terms of numbers. And
oftentimes it's in-home care. Right. So it's somebody coming to your house. It's not that you're living in some sort of a retirement community where you've got doctors and nurses and everybody taking care of you. Right.
Yeah.
So, but it's a pretty high percentage.
Yeah. Now, most often stays in a professional assisted living or nursing home type of care facility are short-lived. Only 15%, according to the same study, only 15% of adults who go into that kind of care stay for longer than 2 years. So, but still, that 2 years, depending on the type of care.
The cost, I mean, it can be $15,000 or more a month.
Mm-hmm.
I mean, the cost can be quite exorbitant. And so as financial planners, we think that it's a risk that needs to be addressed.
Yeah.
And there are a couple of ways you can address it. You can just ignore it
Mm-hmm.
and hope it's not going to be an issue, eat more bacon, smoke more cigarettes, right? Or you can maybe try to self-insure, meaning that you retain the risk and you're going to pay for that care out of your portfolio value or your cash flow.
Mm-hmm.
You're going to burn through money fast if you do that. And then the other is to lay that exposure off on a commercial insurance carrier. And there are multiple ways to even accomplish that as well.
Yeah. Yeah. So, I mean, this is a substantial risk. I think it's important to think about it, especially because the financial implications that it has. Well, let's maybe talk a little bit about what the insurance is and
then
when you end up actually needing it, what's sort of a trigger point.
And then maybe we can talk about some case studies, like some examples that we encounter where people are in a particularly vulnerable position and really should consider actually having insurance for it.
Yeah, definitely. So there's a couple ways that people generally sort of cross the you may hear it called trigger point. They cross over into, okay, probably need some assistance. And maybe it goes beyond the assistance of a family member. One way is through a diagnosis of a serious cognitive decline, like a dementia or Alzheimer's. Another way is through a system of what they call, what we mentioned earlier, the activities of daily living, which include bathing, eating, getting dressed, using the bathroom, transferring from a bed to a chair or to standing or back and forth, and continence. And so when you lose usually 2 of those, that's when we start looking at, okay, maybe you're eligible to make a claim on a long-term care insurance policy. Maybe you actually, that's what kind of when you cross into, okay, I need some professional help.
Right.
If I can't accomplish a couple of those things on my own.
And Medicare isn't going to pay for this for very long. You get a little bit of coverage, but very little.
Yeah.
So.
And Medicaid essentially only kicks in once you've worked your way through everything that you have available to pay for.
Yeah, you can have a couple $1,000s to your name at that point, and that's about it.
Yeah.
So when we think of losing activities of daily living, it doesn't take much to put you in that position. And maybe if you're older, maybe it's a temporary thing. Maybe you're rehabbing from some sort of surgery or something, but that's not really what we're talking about here. We're talking about something that's more persistent,
right,
and really requires care. And it's more care than a family member, an unpaid family member, is likely to want to or even be able to provide.
Right.
So some of the situations where it might make sense. I mean, here's one that has presented itself in our practice quite a few times over the last few years, and that is you have a married couple, and in one case they weren't married, they lived together for many years. One was much older than the other, and so it's likely that the younger spouse or partner is going to provide some degree of care for the older one as they age. No children. And so when the older one passes and the younger one is left aging on their own without anybody to lean on, that's a really good scenario in which they should consider using an insurance product.
Yeah. There's sort of a first layer of defense, if you will, of making sure that you're cared for. And if the question isn't obvious to you that I can self-insure or I can easily afford insurance, not having children or a spouse who's older than you.
Or having children that don't really want to have anything to do with you.
Or that, yeah.
Which is
if you
possible.
find yourself kind of on your own, that's a good time to think about, maybe stretching a little bit to get the coverage so that you can be confident that, you won't run out of money and be transferred from one facility to another. And hey, you've got high quality care throughout the rest of your life. That's a great reason to have it. Another reason has more to do with the age at which you start thinking about the problem. So if you're like in your 50s and you're starting to think maybe you had a relative who went through an experience like this, and it occurred to you, that was pretty hard on the family when that happened. And I don't really want that for me and for my family and for my children. If you're in your 50s, that can often be a pretty sweet spot for insurance to start buying it. One, you're balancing, if you go with the traditional long-term care policy, you're balancing the cost of the premium with the amount of time that you'll likely have to pay the premiums. If you pay for that too young, it's going to be cheap. You're going to pay for it a long time. If you're in your 50s, that's a nice balance of the cost of the premium with the length of time you'll pay for it. And also, you likely have the best means to pay for it.
Right, because you're still working. Right.
Exactly.
Yeah.
So that's a really great time to think about it. And if you find yourself in that situation, that's a good reason to really consider it.
Yeah.
Another one would be, if you want to protect a spouse or your children's legacy, the assets that you'll leave to your children. If you end up going, it's reasonable. It can happen. It does happen where you need some really extensive care for a long time and you end up burning up all of your assets. If you're that older spouse and you burn through everything you've got,
you leave your surviving spouse with nothing to live on.
Yeah.
And a perfect example of that is the case where you need memory care. Oftentimes, if you need memory care, you can live in that disabled state for years, 15 years or more. And if you're spending $250,000 a year on your care, you got to be a pretty wealthy person not to run out of money and leave your survivor completely impoverished. Right.
Yeah.
So, and there's not a lot you can do in terms of planning in an effort to try to avoid that. Right. So if you try to shelter assets so that the nursing home doesn't get their hands on it, you really can't do that very easily.
So without giving up a tremendous degree of control.
Mm-hmm.
Yeah.
Yeah. And there are some legal issues that you have to be very mindful of. So you really need to seek the advice of a qualified attorney for some of this.
You may also find that you've got a family history. It's important to look at your health history. If it appears that you've got family history where people have gone into care a lot, that may be a reason to say, I think there's a pretty good chance that I'm going to need this. So I'm going to go ahead and look at it. Maybe you're healthy now. And so now is the time to do it, because if you wait and these health problems start to arise, or just any health problems that arise as we get older, that window may close or it may get more expensive. So those are definitely reasons. I think this is a big can of worms. And we've not covered when it might not be a good fit. With maybe the last couple minutes.
What insurance may not be a good fit.
When long-term care insurance may not be a good fit. I think the first one is just the obvious one. It's just too expensive. It is very expensive, and if you don't have the money to be able to afford it, it's not gonna make sense. Or maybe you can afford it and it would leave you with very little. In that case, it's hard to see a
So
situation where that would.
Yeah, and there's some
sense.
ways you can kind of sort of split the difference. You can partially insure it. So if you think that you need $10,000 worth of monthly coverage, monthly benefit, maybe you insure a portion of that, $5,000, and then plan to self-fund from your income and from your portfolio any amount in excess of that if you actually end up needing long-term care.
Right.
So I mean, it's not an all or nothing sort of situation.
Yeah, there can be a combination. Another reason why it may not be a good fit is if you're very wealthy and you have the means to just self-insure. That you run the projections, you look at the cost, and you say, yeah, there's no scenario I can come up with where I spend everything and don't leave stuff enough for my spouse and children. There are certainly scenarios like that. Of course, it may still make sense to have insurance.
What happens if you burn through all of your assets, Archie, and let's say you have this long-term care period, and you use up all of your assets? At what point, I mean, does the nursing home kick you out?
It depends on the type of facility, and so if it is a Medicaid facility, you'll just go and be covered under Medicaid because you run out. If it's not, often you will be transferred to a Medicaid facility that will then your care will continue, so you won't be thrown out onto the street.
It won't be the establishment of your choosing.
Right.
And so the level of care and convenience may be different than you had expected.
Yeah.
Or if you're the child of the parent that's getting that care, it might be a very difficult experience for you to see your parents have to sort of move to a less attractive facility, for sure.
Yeah. So, I mean, if you're thinking about this and that is a big concern of yours, I always like to say, start by looking at the costs. Look at the cost of long-term care in your area. You can get pricing on facilities that provide that. Normally, you just give them a call.
Great website, www.genworth.com, has all of that, all of those cost items for your area. You can do it by geographical area, which is pretty nice.
Yeah. And then compare that, maybe get a quote. It doesn't cost you anything to get a quote for long-term care insurance.
Call your insurance agent, see what they've got.
Mm-hmm. Mm-hmm. There's multiple types, which that's a little bit outside of the scope of today's episode, but yeah, look into it, do some research, and run it through your retirement plan, if you have one, and see how that affects your probability of success for retirement. Okay, well, that's about all we have today. Again, big can of worms. We'll probably need to do another episode on this another time, but if you liked it, remember to like the video. Leave us a comment with your thoughts or any questions or ideas for other episodes. Subscribe to the channel, share it with your family and friends, and we'll look forward to seeing you next time. You've been watching Last Paycheck, weekly wisdom to help you retire and stay that way. If you like this show, be sure to hit like and subscribe. Last Paycheck is available anywhere you get your podcasts.